Welcome everyone, my name is Mike Hamilton from Trade Easy Way, and I'm just going to go through some prep for the week ahead. Obviously the US is off today, so let's just see what's happened while they have been away. I'm going to start with the NASDAQ and quickly get through into stocks. NASDAQ is trying to lift itself up here after all this selling. So I've got a key level of support down here at 10,950. Big drop on the Thursday after the Fed day. We did this last Fed day, lifted up and then they dropped it. Wednesday, 4th of May, they lifted it up into resistance and dropped it. That's exactly what we've got here. So if we can close above 650, then we stand a chance of some sort of recovery, which I think is long overdue. I think we are in line for some kind of bounce here. There's a trend line coming right underneath this that we've touched on that low on Thursday. So if we can subsequently close above this level here, then you got you can see the pattern that's there. It's a potential funnel breakup, potential sort of short to medium term reversal. All right, the sentiment out there is obviously very bearish at the moment, but short to medium term, we look as if we're overdue some kind of bounce. It's very oversold territory in this NASDAQ. All right, for those of you just joining us for the first time, by all means type in any questions and I'll get to them. We're going to quickly go through the outline sort of trend in the markets and then get straight into stocks. I'm going to talk about bear rating as well as a few potential reversals and the most important sectors that you need to be in and most important sectors you need to avoid. So by all means, chuck in your questions and then we'll get going. Let's look at the DAX, the German market and the UK market. DAX attempting to hold this. This is the 2021 low here at 250. Germany is already in. Germany is one of the first into recession. There's certainly some minus numbers there. So let's see if they are due a bounce. But look at the crossover in the averages here. That's a 50 and a 20-day average. So if we just knock further up, only just to roll over and those cross, then we are well and truly looking for a lower number here. Yeah, good question, Joshua. I will come on to that. It's a good question. I'll come on to that a little bit later on. So hold that back for a minute and I'll come back to you. So if we now look at the UK, the UK is a reasonable day today, off of this key support. So where's this support come from? What have I got lined up here? I've got, this is fibbed to the 2021 range. So that move into that low there in March was what I would class as an ambush zone. There's the dotted line, the 50%, and then you've got the outer and the inner zones there. And we've just come off the high of the upper zone. So you got fib upper zone, fib lower zone, and 50%. That's the three red levels there. And we have just held on the FTSE this higher ambush zone. So again, expecting a short-term pullback, but look at the knot of averages up on this one, up here, sitting up here. This is 20, 50 and 200, all potentially crossing. So any lift up, so it makes sense to come back and find this 200-day average if we get as high as that, up there at about 7,400. But normally the first test of those sort of averages, particularly with that knot up there, could see that come off of that. If it gets that high, you've got a lot of resistance here. What do I expect? Yeah, I would expect some further lift here. We've closed above because it's a new low in this little range. Close above today, so I think we could potentially lift. I think we could go all the way up to that 7,400. That's a 300 pip push up here. However, if we do get up there, then I think that could be the next leg down. So we've got essentially a 1, 2, 3 wave here. So if 4 only gets us into 7,200 and we close lower, then we could be coming to see these March lows and even lower. All right. So the FTSE, if you could just go back to the Nasdaq a moment, the FTSE's held up a heck of a lot better. This Nasdaq has fared really badly. And the S&Ps are down 20%. This must be down, will be 16. Let me just do the sums. 16,750 over the low of, say, 11,000. Yeah, this is down 50%, over 50%. So the Nasdaq got hit. Why does the Nasdaq get hit so hard, so much harder? A, because it pushed up so much harder into the close. There seems to be a lot more margin calls in the Nasdaq. So essentially, we've had a 1, 2, 3 wave correction here, and another further potential 3 wave into this 12,200. Again, we're attempting to come up here. Volume did pick up. If we can come up and close above 12,200, then we could come right into that trend line again. So we've got this overhang trend line here. We've got the current low is forming that channel low as well. Okay, so let's look at one of the things, and what's doing this? We all know the news is full of the cost of living crisis, particularly in the UK with the weak pound. But so this is the other flip side of it, the strong dollar, because so many commodities are traded in dollars. One of the reasons why the FTSE's fared a lot better than the US markets so far is that a lot of FTSE 100s trade in dollars. So a strong dollar actually pumps up their balance sheet. If this were to close, if this dollar index were to close under 103, that would give further upside, potential further upside on the US indices. Let the pound recover, and overall give some sort of relief to the downward pressure that has been so hard on these markets. I think this dollar could potentially stay high. I think we will see some lower numbers. I wouldn't be surprised to see this 102. But overall, I think the dollar will stay high. We've got Fed Chairman Powell speaking tomorrow. Yeah, I'm not a big fan of averages. I do think they are worth having on a chart because they do give an overall background to what's going on in the markets. One of the reasons why I've got the averages on these charts is because so many people look at them. So it makes sense to put them on if that is something that a lot of people look at. If you take them off, let's take the 20-day average off. It doesn't make a lot of difference to the charts. You can see that's the 50. Let's take the 200 off. Where is that one? Oh, there it is. Yeah, I'm like I said, I'm not a big fan. Certainly, Fibonacci features in a lot of my trading. Right, let's move on. Keep those questions coming. Volatility index is very high. Still, it's very elevated. So we've got, what have we got so far? We've got a NASDAQ that is still very low, particularly after that big drop on Thursday, the post-Fed drop. We've got a volatility index that is still elevated, and we've got a strong dollar. We've still got a strong dollar. So the markets are still in this down trajectory, and any bump up in this market is still to be sold into, because we are clearly in the definition of a bear market. Right, let's move on swiftly. Let's look at oil. So oil has had real relative strength because it is normally you have a divergent relationship with the dollar. So we've got strong dollar and strong oil. What do I think the oil is going to do? It's had a healthy decline here. Let's just map this out. So very healthy decline here in March. We've got a lower high here. So we've broken some structure here. But one of the things that happened last Friday was we had what's called triple witching. For those of you who don't know what triple witching is, it's where all the contracts, the futures contracts and the options contracts and the stop contracts all expire and roll over. So we're now into the new contract. So if we get a higher close above this 108, 109, I think we can recover. But the most likely scenario is that we have still got some downside on this. And cyclically, oil, we're coming into the main US dry season. That normally signals the end of any major cyclical bull run in oil. So I think any push into 110, 112 again could see this come back into this support. So we've got 90 here at support, and the big support down there is 80. So if we push into these areas here and fail, we could see 90, and we could on a bigger correction see 80. I think based on dollar, normal annual cycles, and the problems in the stock markets, I think the demand-supply balance needs to be readdressed, and I think we will see some lower numbers in oil. Right, let's move on. So I think any push back into that sell area from Friday could see that pull back further. Gold. We have a lower close in the weekly because of that big post-Fed drop. There's a hefty drop. So if we obviously the US wasn't around today, but if we don't close above 1848 tomorrow, I think this could come down and break this low and drop out of here. So we had a few little higher highs here, but we keep selling. Every time we pick up, we sell. We pick up, sell. So I think unless we can close above 1850 tomorrow, maybe Wednesday latest, then I think this is going to drop right back to 1880 and possibly even lower. Sorry, 1780. Very likely we're only just above 1830 now. 1830 is and the next pivot support. But at the moment, I'm not seeing that holding. And if we look at the miners in a minute, you'll see why the miners are suffering as well. Right, a couple of other commodities, then we get straight to stocks. Wheat. So this contract changeover has affected wheat as well. So as the new contracts coming in, we might see some lower numbers. I'm very bullish these soft commodities, all the grains. So if we look at this last range, let's plot a major support level. Let's go into these January lows. 950, 970. We've broken support here last week. So I would expect to see continued dollar strength, continued pullback in this, unless we turn around on this 1040. But I think it's highly likely we could come and see 950, 970, at which point, if we hold, I'm a buyer. Natural gas has come off, giving some relief to the pressure. Normally, cyclically, gas comes off much earlier than this in the April period. So for obvious reasons, this has not happened. Next stop, 58.40. If we come and rest on that, I'm a buyer. And I think we can get back to the highs, but I would hope that drifts lower. Cotton. Potential support just underneath that level there. I want to look at high-grade copper. UK housing markets took a big hit today, and this copper continues lower. That would underline weakness in the housing market. I'm expecting the housing market to crack. I do not believe that house prices, this is a personal belief, but I do not believe that UK and US house prices are sustainable, particularly with Chinese and Russian money less apparent in these markets, less active. Right, stocks. Any stocks you want me to look at, punch them in the room. Let's start with housing, because Persimmon, a big, good dividend player, really took a cold today, really took a hit today. Come down on volume. This is not a sector I've been touching anyway recently. 1845 was my target underneath this. Is it shortable? Yes, but look at all the support from October 2020. So you haven't got a lot of air underneath it, which is normally for you need for a good short. I'll show you what I'm shorting at the moment in a minute. Barrett Developments, lower. Any pullback at the moment to 460, looks as if that could go down to, next stop is 436. If that doesn't hold, we could come and find £4, which I think is achievable. Taylor Woodrow, same story. And Galliford's, for some reason, that's bucking the trend. Could be because they're more London centric, I'm not sure. Right, that's housing. So I'm going to look at retail. Let's stick with the negative sectors at the moment. These are sectors. This is, I did an article with capital.com on this one, because I'll give you the link if I've got time. But talking about how I've been shorting this one, every time it's hit this red area, I short. This push up here on the 21st of April, it's my bear raiding strategy. This push up here was a refinancing deal. It's a card factory to me is in a very, very competitive sector. You've got the likes of Moonpig and a few others really cutting into their profits. They're bricks and mortar retailer, so huge overheads and pressures on margins, just the fact that they have shops in the high street. And I just think it's a really rubbish, weak brand overall. I think their shops just look ugly, just look horrible. If I'm not even sure if have I ever been in a card factory shop, not sure I have. Right, if this comes back to 60, the volumes have dropped off here. I actually believe this can go to 30. If this pushes back into 60, then I would short. Profits, at the moment, I'm just pushing my stop down. So I got short up here at 65. I initially had a stop at 68. My current stop is up here at 61. I think what I'll do is drop my stop up above that 58. But I would expect that to at least go to 45, right back to this breakup area, if not lower. Obviously, we've paused here, we've closed higher, so this might turn around. It's a trend line support. Previous trades, on previous trades, I was taking it off at major support. So on the previous short, I shorted that initial high, took it off on that trend line, went back in at 62, took it off at 47. It actually went down to 38. So if this closes higher again, I'll back off and I'll take it off. But I would re-engage this short if that went back into 61, 62 and subsequently closed lower. I mean, the previous trend lines have held on this. So there is, if anybody who was short up there wants to grab a profit, this is profit level 1. But if we break that low, then I think we're going to see 45 pretty quick. Let's go across to some other. Boo is attempting to very, very weak stock. That is technically a buy signal. That is a buy signal, full stop. New low, close above next day on Friday. So as we got with that FTSE, it's hit the underside of the trend line. So I wouldn't touch it with a barge pole. But technically, the thing I don't like I don't like the sector, and the volume did pick up on that Friday, but it's not convincing for me. But anybody who wants to take that, then that's an option for you. Let's look at the Sainsbury's. I've got a lot to get through, so let's hurry up. Sainsbury's saw some volume today. Pathetic close. Could be a lot of short covering, because that has had a nice ride down. I don't think there's a trade there. There's certainly not a trade there for me. Keep the questions coming. Do I have any good volume indicators? Well, the oscillators are good. You've got the VWAP. So a lot of day traders and other traders like the volume weighted moving averages, the VWAPs. Otherwise, I've just got a 20-day average on the volume at the bottom here. Tesco's, it's trying to bounce. It's come back in. So we had a break up here on the 6th of October at 243. That's been tested at the moment. That's holding. Volume has increased, so there is potential for more upside on that. Just because the markets are weak doesn't mean to say they fall out the sky. I mean, that was a good close on the FTSE today. ASOS really struggling, really struggling. No sign of that pulling up at the moment. Cutting across, let's look at airlines. EasyJet, Let me just have a sip of drink. EasyJet, that was a buy signal on Friday, but obviously they're on the news a lot at the moment. They've got a lot of problems. Announced, I think today, announced more summer flight cuts. So if I was going to trade it, I would try and short around about the £5 mark. If I'm not even convinced it can get above this 450. Well, certainly the 460 is a key area. That might, I suspect that might climb to about 460, 470, and then turn over again. We've got a three-wave drop here. But this third wave could still be in progress. Certainly, IAG surprise, and that's a stronger pattern. That's a stronger push. In fact, that's potentially having engulfed that Thursday, 16th of June. That could see this go much higher. So EasyJet is struggling, is having a much harder time than IAG. Jet, let's look at, yeah, I can look at TUI next anyway. TUI, same, very, very similar to IAG. That has come up on volume, but it's just not for me. I certainly wouldn't buy it. I would, if I was going to trade this, if I was forced to trade it, I'd love to get short closer to £2. Could this recover? Yeah, sure. You know, it's we've got trendline support down there. We've closed higher. We're coming out of that the potential little funnel pattern here, which could take that higher. Personally, I'm just not touching that sector. Jet 2. Very similar to IAG. This has got relative strength to previous airlines I've looked at, because this that's actually, if I was forced to trade any airline, it would be this one, on the basis that didn't make a lower low on that last drop. Volumes are better, but not brilliant, not great. Wyckoff, don't know that one. Let's look. Can't even find it. It would help if I spelled it right, wouldn't it? Is that the right one? What's the ticker? COFF? That's not the right one, is it? Can't find it. Sorry. Moving on. What else are we going to look at in this sector? Derek Smiths. Have we got? Okay. Are you investing in these? Are you in these airlines, Andy? Same story. You tend to find that you get one pattern and it just seems to repeat itself amongst that industry. Volumes appear to be better in this way. It's interesting that you hold at IAG looking at, right, Okay. Of all the airlines we've looked at, that's had a steeper pickup in volume from memory. Right, let's look at banks, because I don't want to take up too much of everybody's time, even my own time. So let's look at Barclays. I saw all this, I'm in this, saw all this resistance 170 and didn't take it for some reason. I don't know why, but it looks as if that's capable of climbing back. Rising interest rates tend to favor the banks anyway, as long as the economy doesn't get badly hit. So it's vulnerable like any other business in this UK economy. But I really hope that can get close to the £2 if that can start to wind up again. Lloyd's is very similar pattern. Okay, well that's a significant close up there. If you're gonna trade Lloyd's this year, then trying to bid on 42, 43 could be an opportunity for you. Everything is fragile, but I do think we are due a short to medium term bounce, and something like Lloyd's at 42, 43 might do it. I mean, I'll tell you what, if Lloyd's gets holds above 45, 46, that could go all the way up to 50, 51 plus. If I pinch out of that, that's a reasonable pattern there. It's got a series of lower highs, so you can see that the danger is all we do is hit that 45 and roll over. But yeah, like I said, if you are interested in Lloyd's, this could be your chance to get in. Legal and general, just a quick look around the sector. Not great. Sabre insurance, just no. Direct line. Yeah, that's a sort of a pin bar off of a support area. That has been as high as 295. Potential, it's not a bad chart pattern here on this one. You've got a potential sort of head and shoulders here. So if we close above that, this and hold 250, we could go and find these upper levels. So yeah, if that's something you've been following and you've been tracking and ready to get in it, this could be your chance to get in it. What stocks tend to sort of drift and drift higher during these, once the volatility like we've seen dissipates. So there is a potential for this. Like I said, as I said with the FTSE, I think there is potential for some short to medium term upside on this. So these are the kinds of stocks you could consider. IT, IQE, very, very similar pattern that we've been seeing. Decent support. You might want to bid on 32, 33 with a stop under 30 to see if you can get to 45 on that one. Will it get to 45? I do not know. Nobody knows. Good times or bad. Nobody could put their hand on their heart or their hand on their wallet. But there is, these dips are getting bought in something like IQE. It's just not brilliant. It's not seeing a lot of follow through. Seeing machines, been looking at this for a long, long time. It gapped up. Look at that. It gapped up on Monday the 6th and has pulled right back to 690. It's a cheapie. It's got heavy goods vehicle technology. They're trying to introduce some new technology into the cabs of heavy goods vehicles. So it's a technology Yeah, this whole scan is for technology. So digital, nope, looks lower. This is these guys are. This is Lucell. I think it's LED lights. Nope, don't like it. If any time it gets around close above 1010, I would be tempted, but at the moment I would not buy that. No, I can't remember what Nano do. Well, Nano's been on a good run, and that's pulled back. 33 is the key support area, so I would personally back off until that proved itself. Right. Basic materials, then we'll look at energy. Right. Now, this has been a good sector. Rio's pulled right back into that support. Phoenix, okay. I'd have to say that still looks lower to me. I think that might come and find 47.80. Elementis, I'm going to risk a trade on this one. I've been talking about this one for a while. I'm going to bid on 104, but I'm going to get out if that goes under the pound mark. Actually, I might wait. But, okay, I'm going to wait, see if that gets close to the pound. But if it closes higher again tomorrow, I will buy higher, 104, 105. Chemical company, Man Group, commodity brokers. Too high for me. That's TPI cap. Let's have a look at TPI cap. Ooh, that's falling back into this 114, I think. Very light volume, so I'll have to stay away from that one. CTL, I've forgotten what CTL does. Nope. All right, let's look at Andy's Phoenix. HNX. What do they do, Andy? I should know that because this. Are these in the? This is a financial stock, isn't it? Don't they buy up funds? Or am I think it's somebody else? A close. This is a significant close on this one. Right. Okay. This is a very significant close. If that looks like a buy at 615. Broken up. Volumes are not brilliant. It's only popped up to resistance. So if it pops back down again, you're in trouble. That's a key level. It doesn't grab me, that stock. It really doesn't grab me, but the fact it's able to break up and hold above that structure is definitely positive. So defense, British Aerospace, sitting up high. Now this one is interesting. I'm talking about buys, aren't I? Apart from Card Factory and one or two others. This is Chemring. The brokers have got quite a hefty target on this one. I can't remember what it is. But if we can go back and close above 375, that could ultimately go to 410 and 450. That's a significant drop here. This low is a neckline, actually. There's a potential head and shoulders pattern. But the volume's good. All of this is, it's that much riskier, isn't it? It's definitely that much riskier. So just tread lightly. Miners. I'm going to think about going. PAF. I'm in this. Added to my long back in the last week. Gold is dithering. A lot of the metals are dithering. We've seen copper drop. These are gold miners. Can't remember the region they mining. Well, it must be, it's Africa. It's called Pan-African, isn't it? It must be Africa. Surprise, surprise. It's holding a key trend line. Volumes are not great, but they're okay. So obviously I'm in this, FYI, I'm in it. I will get out if it stays under 18. But in the meantime, I think that can, if we get above 20, then we could go and see those highs. But there's a lot of red on that chart. So if you're in it or you think about buying into it, try and bid on 19. But my plan is to get out if that closes under 18. Yeah, Rolls-Royce, thanks. It's had a good day, isn't it? Griffin. Yuck. So with this huge pull up here on the 3rd of March and subsequent highs are just sold. So that looks lower. Hochschild. Nope. Sentiment. A lot better. That's a lot better. So Pan-African and Sentiment are standing out for me at the moment in this sector. Otherwise, not a lot to do. Let's look at Andy's Rolls-Royce. I'm in this as well. Yeah, it's had a good day. Look at the volume. Is there I didn't see a story on this. Is there a story on this? I mean, based on that volume alone, if you're not in this, bidding on about 89 with a stop under 85, because just purely because that's such a significant volume coming in and a significant close. So if that can get going, I would envisage that would go and see 10. You can see back here in April, I thought we might start climbing up to 125 plus, even in April. The volume didn't justify that. But yeah, Rolls-Royce looks good. What other scans? I got a couple other scans. Let me show you what I'm looking at. But if you want to short anything, I think the most obvious place to short is the retail sector, particularly. I think this shoe zone. I've not investigated shoe zone, but you can see I've plotted it. I think anything into I don't know if it will go as high as 158, but that to me looks as if that could do what card's doing and just sell it at that high. I think that can come and see 120. I think that is eminently shortable. Very, very shortable. And you pop your stop above 167. Looks as if it's offering 153 today, 154. You never know, you might get a little bit higher into that pink zone if you're lucky. Right. So, but it's things like Car Factory and Shoe Zone, I think are short. One something I haven't looked at for a long time is Hammerson. Wow. It was in this box play for ages. And now we're just fallen right out of it. So we look as if that's coming all the way to 18. I did trade this for a short period, but I didn't hang around all right. Box plays, if they are short box plays, then moves into the center of the box or 3/4 into the box, a good place to get short. But this was sitting up. Had a good run off this 25, 27 into 37. But it is not doing it now. Right, any last requests? Otherwise, I'm off. I was going to show you this one. Hang on. I've got a couple of interesting ones because we've not looked at oil. Tallow. Tallow's struggling. I have to say that looks lower at the moment. Gulf. I can't remember what this one's called now. Your SQZ. So it's been on a nice run up to 324. Volumes are okay. I think you might see 273 on that, but hey, I could be wrong. And that's actually a short-term sell signal on Friday, but it's held up today. I mean, if you got a long-term plan on this, obviously don't ignore me. Don't listen to what I've got to say, but otherwise, yeah, I mean, if we can hold here and close back above 320, then you could go back to those highs. It did hold support today, so SQZ looks all right. And it's had a nice run off this support, but very congested just above us. Brilliant. Thanks a lot for joining us. A couple of people drifted off anyway. Any final questions? I will send you all links to the program I'm setting up. I'm going to be doing a piece on how to survive and thrive in 2022 as we get into the second half. Well, how to thrive and survive in the second half of 2022. Obviously, the first half is nearly over. So I'll talk about, oh no, it's going to look at this one. Talk about, no, don't like it. Specifics that, specific events and sectors that could do, this is it, this one I might show you. These guys are into hydrogen power. So hydrogen power appears to be taking bigger steps forward at the moment. I think I heard Volvo had launched a prototype on the road today. They announced it today. It's highly speculative, highly speculative. Joshua, I don't know what you're talking about. Wycroft and smart money concepts. No idea what you're talking about. Are they? Be interested. Let me know what you are talking about. Enlighten me. It's similar to like fib. Okay. Never heard that before. Right. Okay. Brilliant. I will be in touch very soon. Thank you very much for joining me. Do join me again next Monday, and do watch out for video links. I do a midweek video update on this, and there's more events to coming. So thanks again. Enjoy your evening, and bye for now.